The silent death of the used car market. Imagine this. A car you've babied for years. Full service history, zero dents, perfect condition. Tomorrow? Worthless. No crash, no theft, just the depreciation cliff. And it's coming for the used car market. This isn't a scare story, it's a reality. And it's being driven by regulations, technical failures, and financial gatekeeping. Today, we investigate the 7 silent killers of your car's value. Segment 1. Euro 5 diesels. ULEZ and CAZ charges first. Euro 5 diesels. Once reliable workhorses, now financial liabilities. ULEZ, CAZ, low-emission zones are expanding fast, and the charges are harsh. Hypothetical case, a BMW 320D in Manchester, 2014 model, just became £4,500 a year more expensive to run. That's enough to erase resale value overnight. The depreciation cliff isn't a rumor. It's a daily cost hitting your wallet. Technical insight. Why now? Euro 5 diesels failed to meet nitrogen oxide standards. Authorities didn't ban them outright. They made them uneconomical to use. The insurance industry quietly mirrors this, pricing diesel policies higher. The result? Your once prized diesel is now toxic on the market. Segment 2, 2000 to 2010 petrols, 2026 emissions MOT changes. Next, classic petrols. Cars from 2000 to 2010 are under siege. The 2026 MOT changes will make emissions a strict fail criterion. Hypothetical case. Tom, a Vauxhall Astra owner in Bristol, is facing a choice. Spend £1,200 on a new catalytic converter, or fail MOT. Either way, resale drops to zero. The depreciation cliff strikes. Technical insight. Exhaust systems degrade naturally, but new MOT rules treat marginal emissions as dangerous. Combined with rising insurance premiums for older engines, petrols are becoming unbankable assets. Segment 3, structural corrosion, 2027 MOT, dangerous failure. Rule, rust isn't just ugly, it's lethal to value. 2027 MOTs will classify structural corrosion as a dangerous failure. One patch of rust, and your car is off the road for good. Case study. Sarah in Newcastle owns a 2008 Ford Mondeo. One weekend under the car, and the MOT inspector calls it a dangerous failure. Insurance companies won't touch it. Zero value. Depreciation cliff. Technical insight. This isn't arbitrary. Safety regulations mean insurers can refuse policies. MOT bulletins now explicitly warn of hidden corrosion leading to total write-offs. Segment 4. Gray imports. Insurance blacklisting. Gray imports, cars imported from abroad, face another silent killer, insurance blacklisting. Even if the car is perfect, insurers are refusing coverage due to repair uncertainty. Case study. Take Mark, a Leeds-based Skyline owner. Policy renewal comes back denied. Market value? Slashed by 40% overnight. Technical insight. Insurers fear sourcing parts, unknown crash histories, and liability exposure. They don't ban these cars. They make them financially uninsurable. The depreciation cliff strikes quietly. Segment 5, 2015 to 2020 ADAS systems. 2028 MOT sensor failures. Advanced driver assistance systems. Lane assist, adaptive cruise, collision warnings. Brilliant tech, but a ticking time bomb. Hypothetical case. Emma in Birmingham owns a 2018 Tesla Model 3. In 2028, MOT sensor checks tighten. One faulty camera, MOT fail. Repair? £3,000 minimum. Resale? Cut in half. Technical insight? A DAS failure equals automatic fail. MOT updates aren't arbitrary. They anticipate sensor degradation. Insurers raise premiums on any post-fail ADAS repair. Another depreciation cliff. Segment 6. Early EVs. 2029 70% battery health threshold. Early EVs face an invisible killer, battery health. By 2029, MOTs could fail EVs below 70% battery health. Early Leaf's i3S and Soul EVs may become worthless. Case study. Paul in Leeds drives a 2015 Leaf, 68% battery health. He can drive it, but it fails MOT. Insurance skyrockets. Resale gone. Another depreciation cliff. Technical insight. Battery degradation is natural, but combined with new legal thresholds, even well-maintained EVs face market extinction. Segment 7. Modern casting/bonded chassis. Post-accident uninsurability. Finally, bonded chassis. Modern cars rely on glued panels and structural castings. One accident, even minor, and insurers may refuse cover. Total loss. Market value, 0. Hypothetical case. Lucy in Manchester scratches her Range Rover. Repair done correctly. Insurer refuses coverage. Resale, impossible. Depreciation cliff. Technical insight. It's not poor design, it's cost containment. Bonded structures are expensive to repair. Insurers and MOT rules together enforce uninsurability quietly. The financial trap. Diesels, petrols, rust, imports, ADAS, early EVs, bonded chassis. 7 silent killers. One result. The depreciation cliff. Owners spend thousands maintaining cars, only to see value evaporate overnight. This is the financial trap. Actionable advice for owners. So what can you do? 1. Stick to Euro 6 petrols or simple diesels. Fewer ULEZ penalties. 2. Invest in mechanical classics. Simple brakes, no sensors, no batteries. MX-5s, old Land Rovers, early 90s Porsche 911s. 3. Monitor MOT bulletins. Plan ahead before your car hits the depreciation cliff. 4. Avoid gray imports unless you're fully covered. 5. Check EV battery health. If below 80%, resale will be painful. 6. Insist on post-accident bonded chassis certification. Keep paperwork airtight. Knowledge is your shield. In a market engineered to devalue, foresight is survival. The used car market isn't dead yet, but it's under siege. From diesels to EVs, sensors to rust, value is disappearing quietly. Avoid the depreciation cliff. Stay informed. Drive smart. Protect your investment.